Good morning, everybody. And as I typed into the chat, and for those on social media, um, I want to be able to see if you're typing because I don't have limited space here. Working off this laptop, no power here, so running off of the battery on the laptop and a hotspot on my phone. The backup batteries are drained from last night, so I'll make the best of it. Supposedly, they're supposed to get the power back relatively soon, but they always say that anyway. Let's see where we're at here. So clearly, the momentum came to a screeching halt yesterday. Spiders here right up into that pivot high with the other one right there in that area. You've got a little narrow range bar, a little narrow bodied bar, which we see is slowing momentum. And so clearly the depth of retracement was powerful. A candle like this is going to result in either, could be a couple of days, right? A couple of days today and tomorrow. Might be just chopping around up here. Tomorrow's an options expiration. So maybe things won't move very far. If things are going to start to move lower, the obvious place would be this unfilled gap down here. Might not come until Monday. So, don't get too anxious. We don't have any clear big fake out bar yet. Walls, bars moving up, reaching resistance, momentum stalls. It's not even a range expansion, wide range bar. So it's not a powerful slowing momentum reversal signal. So until we have that, don't get too anxious on the short side, I would suggest. If tomorrow should gap up and we get a big red bar, that would be much more potent as a reversal as this was, but failed. It was the start of the move. And as large as that reversal was, it got negated. And as we all know, power went up, thinking power on my mind coming back here. The buying continued and it was a giant gap. So historically, this is a monster sized gap that's going to get filled. I think most certainly is going to get filled by next week. The ones down below here, maybe not. We'll just have to see and continue to monitor, as we always do, what happens with interest rates, which right now looks like they're going to continue to be lower or stable. Let's see. Let's take a peek at where they're at. You can see the 10-year here staying in the bottom of this bearish wide range bar. There's support relatively close. So odds are they're not going to go that much lower. You can see kind of head and shoulders kind of top there. I thought this would have come up to the 20 and would have formed that pattern. It didn't happen. But now with a wide range bar down and prices staying in the lower half, unfilled gap down here. I think it's likely it comes down here, which would support the market going higher. Economic news that was out this morning, jobless claims increased, which, in the past weeks, the markets would have liked that and would have went higher. Meaning, here's more information that the Fed isn't going to raise interest rates. And now a lot of information now says that they weren't. And a couple of weeks ago, I pointed out here, hey, this thing's starting to roll over. And if you look at this on a line chart, you can see how it's a pretty severe breakdown compared to the way it was going up. And that was our heads up. And so as more information has come out that the Fed is going to pause for now, this is staying relatively low. Got a long, long way to go before it gets anywhere close to what would be desirable to return, economic things, borrowing money at short-term interest rates is going to be a long time before it gets anywhere near what it used to be. So, the expense of borrowing money short-term and even long-term for now is historically, compared to the last couple of years, extremely high. So while, this inflation thing may transitory, let me correct myself, transitory inflation thing. Remember that word? Um, may have seen its highs for sure. I think so. Um, it's not going to be down at that 2% level, and this isn't going to be down where it was, right, for a long time. Right? As it was anticipated that they'll start cutting interest rates. And why are they going to start cutting interest rates next year? Because the economy will be slowing, because these interest rates being where they are what they were meant to be, restrictive. Um, Borrowing short term. You want to go buy a car, lease a car, all that costs a ton more than what it was back here. You want to go buy a house, now it costs a huge amount more than what it did not that long ago. So all of those restrictive things, we may eventually get the recession word. We'll see, but that is where things will go for the Fed to start thinking, hey, we need to start cutting interest rates, because they'll get more and more information that things are slowing down, which we already know they're slowing down. It's evident in a lot of different places just in your day-to-day life without looking at the numbers. So NASDAQ has had a hell of a run. Lots of unfilled gaps. It's up into resistance here. Yesterday had a little bit more of a meaningful reversal day. Where are they here now? Gapping down a little bit. They're down a little bit here. Really not a big deal. And you can see this little shelf of support with the void below, but it's got to get below the day before yesterday's low to get into that void. So an obvious and clear place where to set an alert, where prices would have to break below. And for a day or two, coming down here, it may not exactly stop in the unfilled gap. Maybe it's going to come all the way down to here. It's going to be a relatively sizable move lower once it begins, but it still won't violate this uptrend, but it'll be a sizable move lower where buyers should step up again. And so we'll see how that plays out into next week. Transports, they got above these pivot highs, another positive event by violating this downtrend. One of the things that we always point out in the courses and to students that, look, you don't have to draw diagonal lines, because moving above what we call major resistance is going to break above the downtrend line every single time. So this one concept of moving above major resistance will violate your downtrend line, and it's not subjective. It's black and white. It'll happen every single time. And so you don't need to draw diagonal lines with imaginary resistance into the future somewhere, by connecting dots. All righty. Positively, IWM continued higher, broke above multiple pivot highs, hit its 200 MA, backed off, minor resistance. So this will correct a bit. This has got a void below. Factory work. That risk has increased for longs, and it's not where it's risk off for shorts. But intraday, there'll probably be more wiggles today, probably tomorrow. And be careful not to get chopped up in the gyrations. These are up a little bit, kind of churning their way up here pre-market, I guess, on that economic news. The market's like that, a little more confirmation, but not any kind of a drastic move as you would expect after a meaningful move like that off of the low. More positive information, longer term. Regional banks traded above the prior major resistance, hit the 200 MA, which is in alignment with this pivot high. Likely it's going to correct a bit. SPX, I was able to grab numbers there. They're probably still the same, since things haven't moved too much. Yesterday's strikes never got touched with that little narrow range day. Um, you know, the upside should be a no-brainer. Pivot up there, line of defense. Um, Average ranges show that if we were to get a range expansion bar, these are within striking distance either way. Uh, but it's unlikely that it's going to go up toward that area, that 45 today. So I believe that's a good number. And while the downside, common sense would say, is more likely, um, I think we can have more of a choppy type of situation here today, give or take. And I wouldn't even be surprised if it got slightly above yesterday's high. Getting below yesterday's low, of course, wouldn't be any big deal. So it's just basically unchanged here, and it's not all that far away. And let's take a look at YT. Oh, let's take a look at the diamonds. We don't look at them every day. Um, Move. They're up into this resistance, so they're going to stall. Retailing, more positive news. I mean, this might all just be, Christmas rally, end of year, yada, yada, yada. We'll just have to see when the selling starts, to what level things pull back, or do they chop sideways, which would be even more bullish, right? Not pulling back very much, but choppy is not pleasant at all. Easy to get chopped up in that. Yeah, Bitcoin down 1,000, but no big deal. I mean, it's just giant ranges, giant ranges. Weekly chart is not even at resistance. It hasn't even come close to minor support. It is at 40,000, near it, so it's close to a whole number. But so far, it's just consolidating in a whippy manner, so it's pretty positive. Looking at bond prices, we always look at the yields, but look at that. Downtrend has been broken. Up above major resistance, wide range bar, consolidating, may whip around here. I think, as far as this has been down, as far as it has, you can see where it topped out here in 2001. I think a lot of institutions will be looking to buy the dip here. And, interest rates aren't going to come down, I think, tremendously, but you buy the dip, and if you buy like whatever, to get the yield, you can just think about buying bonds here and yield and principal appreciation. It seems that as far as these have been down, maybe we get a little retest of some type, probably be something that outperforms next year. In gold. No, gold just consolidating. You think maybe it could get a sell set up here, coming up into this minor resistance, but that was a nice move off of this low here. It'll be interesting to see what that does in the coming weeks. We'll update that. Silver, much better. I mean, it's in a trading range and it's whippy, but much better as far as longs. And this is moving up quite nicely today. Not going to chase it, but 3 days up in a row here into these pivots, but that's a powerful move. Gasoline, stable. It's come down quite a bit, and a lot of those economic numbers yesterday that were rejoiced over, a lot of it was based on the drop in oil and gas, which is significant in a short amount of time. They're stabilized there. Crude oil's down here a little bit. So, I mean, I thought this was going to go higher. I mean, we look to the left and say, okay, it's up at those pivots. What's it going to do there? It's like any other time we look at something at resistance. Does it go sideways? Just like we're looking at the broader markets now. Does it pull back? How does it pull back? Does it pull back vertically and drop like a rock off a roof? Or does it kind of, bull flagish kind of pull back? So how it pulls back are what we call angles of retracement. tell us a tremendous amount. And when they pull back like the rock off the roof, that's a power move suggesting lower prices. So as crude oil now is coming into some support, the question becomes, does it form a W pattern here in reverse, which is no evidence of that yet, or does it continue lower to this more significant support area here, which the markets will like, but also, and I mentioned it, I think, a week ago, if this continues to come down here, which we're going to say great, lower prices at the pumps, and whether it's TBT, whether this starts to drop significantly, or the 10-year, you're going to hear more voices start saying the word recession. And with that in mind, it's going, that typically leads to a correction in the markets. Now, corrections in the markets happen, but the good thing is some correction is going to come. We know that. The good thing is that the power of this move, which was great, the correction that comes, there's a lot of room to drop without making higher time frames, longer time frames damaged. So that's the positive of it. But I think that recession confirmation is going to be coming, and we'll get some correction next year. And from there, I think we'll resume what we do day to day. Right? It'll bottom out, it'll go up, and maybe we're just going to be in some type of a trading range between those old highs and this low that formed in October. Well, yours, Dan. I don't know how long I got a little bit of battery left here. Hopefully my power will come on.
Hey, Greg, tell them the story when you had to run the green room from your boat.
Yeah, that was cool. Because I got a generator on the boat. I had all the power on the boat. I go in the cabin there, and I took an extra monitor and hooked it up to my laptop, and yeah, that was good. Thanks.
And guess what, Rocco? He has a mini bar in his cabin too. So
yeah. Well, we can move the bar out to the boat. We do that on a regular basis.
Cool. All right. Hey, I'm going to start with an email I just got about yesterday's MT Live. So go ahead and read that. Even if you can't make it, go watch the recording. And here's my response to him, because it's a good psychological example of learning. And we talked about it yesterday in trade review, right? That's what we talked about. Good trades, bad trades. Did I do something stupid? There it is right there in black and white from a great subscriber trader who's been with us, and we've seen amazing progress. All right, let's go to earnings here. And the big ones, the big shockers here were right last night. Cisco. I mean, I was thinking of selling the 51 puts. I'm glad I didn't. That's a nasty gap. So I have this in my list as an excessive gap, even though it has no pattern. We'll see what it does. It's a real company. I mean, this was one in the 90s when we were day trading. This was one of the top 5 NASDAQ leaders of, this Dell, Intel was the leading semi back then. Brett. Okay. All right, so Cisco and W. We were thinking of doing a condor on this yesterday into earnings. I was thinking of the 220s or 210s, so that would have worked. It's, gap into the bottom of the range. I also, let me put that here. Then we'll see what it does. And that That should drag down hack. So see hack gapping down a little bit, all these cyber stocks. So we can look at that sector for possible call spreads because everything's up so much. Like talking about call spreads, we did three of them yesterday in the video. Climo, major resistance, Intuit, Climo exceeded major resistance, but still it's cooked. And then we did Duolingo, same. It's all-time highs. But I'm not shorting the stock. We sold it to 220 call spread. Continuing here, Sono, potential bottoming pattern, Maxon, another Green New Deal, just on a death trend. Just incredible what's going on in the energy policy in America. Sloppy, but potential bottoming pattern based on the weekly. Wide range breakout. You got two consolidation bars, but nothing to do on the daily. That's an M top. But it just means it takes more time to develop. SQM was a sell setup, capping down. That could be a day trade short. Put that in a 5-minute window and see what it does. Pennant. It's toppy also, but cheapo. Wow, CPA airline getting a big gap, but no pattern. Click. I don't see any volume, but looks like it might be headed to the gap fill. Kind of light volume. I don't see any pattern. T-Tech, no pattern. MMS 8085. Put spread if there's any juice. GMB, that's a bearish gap. And Sky X, there's a 1, 2, 3. I'm going to set an alarm at 177. If that opens flat and then takes out a 30-minute high, it's a nice little daily weekly. Look at it. It's a pseudo W bottom. It's a bullish 180 retest on major support. So whether you call it a double bottom or bullish, call it whatever you want. It's a bullish reversal. And now this is a 1, 2, 3. And actually I got pan W on the other one. This looks good. This is, a dollar stock, but if it opens flat, could go to 2 to 210. Walmart, things that rally, it was all-time highs, a lot of excitement with Target yesterday, and now it's gapping. Oh, wow. Wow, I didn't notice this. I did not notice the size of this. Wow, 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 wow. That is a shock pattern. That is a nasty gap from all-time highs. I have Cisco and the other computers. I'm going to put Walmart here. 80 bucks. There's a bearish gap. You got to be careful trading these Chinese stocks. Not only are there ADRs, but they're gappy. News can come out and just whack the pattern. Now NT is 110. Let's say hypothetically it was gapping to 112. Then I would say fantastic call spread setup. But I just don't think we're going to get any juice now for tomorrow. Tomorrow's Friday. Now this I had on my list. I think I set an alarm at 33.30, but now it's gapping down, so no interest. One, wow, that's a big gap. Oh, nice. Now, Williams Sonoma, there's a nice double bottom right there. Nothing to do. A possible condor though. 30-minute low, out of the money call spread, out of the money put spread. Um, hey Greg, that would I'm always thinking of MT lives. And I told you I'm going to work on one called The Power of the Tail. Look at that tail form the W bottom retest. But secondly, I was just thinking another MT live might be called name that pattern, not name the pattern. Um, something like name that trading opportunity. And then we'd say,
That could
okay,
be good. I mean,
number,
that could be a very good MT live with multiple time frames, and we're covering in the course the transition from red to green, where we is about that and how it happens in multiple time frames, but it could be about the transition to a bottoming tail too. So it could be more of an advance. It'd be very interesting, I'm sure.
work on it. BBWI, nothing to do there. Target credit spread, Thomas. Sure, there's any juice. It's down with Walmart. So I personally, based on that fact alone, and the markets are weakening here into the open, I don't think it's going over yesterday's high. Although the pattern is still bullish as can be. The fact that it had a gap that freaking big and closed with a wide range bar is strength. But I'm with you. It's a different trade. Oh, Macy's is rocking and rolling. Wow, look at Macy's. That's an intermediate term bottom. Or no, no, no interest. 1268 gaps up here. Still has room, but it's far from the 20 now. It's not a good entry. This was a potential bottoming pattern. You know what? I'm going to set an alarm at 1090 because then it would negate the gap down if it happened to get there. All right, shoot Carnival, no interest, 2250. Deo. Now this was a potential breakout. It gapped up to 450 and it's coming in. Let me set it now at 450. Ideally, it does not trigger in the first 30 minutes. Let it build a little base. Oh, new. Already moved a lot. Bottoming pattern. All right, those are all the earnings. There's a lot of oil that's on our short watch list. This one's not oil, but pseudo sell setup. I like this one. A Dino alarm, 5-minute low you can short. OIH. Oh man, the gap's messing it up. So Alex, I know you entered one or two early, so you're getting paid for that overnight risk. But there's beautiful sell setups and bear 1, 2, 3s in the oil patch. All right, let me see. All right, that's the only one that went off on the EO. No, EOG. Shoot, so EOG, darn it. So the freaking gap messed it up. Let's see, I gave 2 call spreads and 1 directional. What was the directional? It was Halliburton. Hey, the gap's messing it up. IRM up alarm from yesterday. Yeah, we have been very selective on new directional trades. So hold off on that. AEO low alarm. Pavel on YouTube asking about knee above the high. The problem with that, Pavel, is then you're going to have an extended 15-minute chart because that tail is fairly far away. So what I recommend to you is set an alarm up there, let it go through the high, and then watch the next buy setup on the 15. All right, AEO. Let's see, did it hit a stop or was this an early stop? Early alarm, I mean. 1925. Let's move at 1924. It just pegged it by a penny. Hold on now. BJ out. I'm not in BJ. Well, Alex, we've talked about that many times. And the answer is